Hi, I'm Ben Jenkins, co-founder and chief investment officer at DigitalBridge. I oversee our fund investments. Mark and I have been partners for over 15 years, since we started working together when we invested in Mark's company, Global Tower Partners, when I was at Blackstone. After GTP was sold to American Tower in 2013, Mark and I founded DigitalBridge. It's been amazing to witness the growth of the digital infrastructure sector over that period, not just as a segment of the broader infrastructure landscape, but into its own proper asset class. I'm here today with Steven Sonnenstein, one of my partners who leads our global tower investment practice.
Hi, I'm Steven Sonnenstein. I'm a senior managing director here at DigitalBridge. Today, Ben and I are going to cover the first of 3 thematic presentations. This one is about 5G. We'll start by giving you some context for the opportunity, show you how we've invested successfully in prior tower investment cycles, and we'll finish with a couple of examples of how we're applying the tower playbook we've developed today in some of our newer investments.
So let's start with a quick primer on 5G. What is it, some of the opportunities it creates, and the investment cycle associated with it?
5G is the next generation of mobile connectivity, a revolution in speed and capacity that will not only improve the applications we use today, but enable a whole new generation of future use cases. Some that we can see, like drone package delivery or autonomous vehicles, and others that have yet to be imagined. Early 5G deployments are already 10 times faster than 4G, with the promise of reaching up to 100 times faster in certain settings. The speed and capacity of 5G won't just unlock consumer apps. It will open up a new era in enterprise mobility as AI-driven device-to-device communication drives exponential growth in mobile data traffic. Ericsson's 2021 mobile report shows global mobile data traffic ramping from 50 exabytes a month in 2020 to almost 5 times that level by 2025. Investments in 5G will create the capacity to serve both consumer and enterprise demand. Macro cell towers will continue to be central to effective, multi-layer 5G networks, anchoring the mid- and low-band spectrum deployments that are pivotal to ubiquitous coverage. To enable this first stage of 5G, GMSA estimates $1 trillion of capex will be spent on a global basis over the next 6 years. In the United States alone, over $80 billion has committed in just the last year for spectrum. Deploying capital efficiently into this next cycle will be crucial to carriers and network providers around the world. This makes the shared infrastructure, neutral host model of independent tower companies more compelling than ever. DigitalBridge's 8 tower co-investments, operating and growing around the world, will benefit from this powerful investment cycle and the improved connectivity that it will deliver.
Okay, so you can see why we're so excited about the prospects for 5G. Some really interesting use cases and a lot of associated investment opportunities. I hope one of the takeaways here as we discuss 5G and walk you through these case studies is that this is just the latest generation, the most recent cycle for us. We've been investing successfully in the tower sector since the first G. We participated in the progression from analog to digital, 2G to 3G to 4G, and so we're now on our 5th G. What's important about that is it's allowed us to develop an approach we know works, that's been battle tested and refined over all those prior tower investment cycles. Before we get into the case studies, I thought we'd share a couple of observations about how the tower sector has evolved over time. As you can see here, this slide tracks the evolution from 2 to 3 to 4G. And what you've seen at each stage is growth in the number of towers, from 60,000 in 1999 to 120,000 10 years later as the 4G rollout kicked off. And today we're over 200,000 traditional towers here in the United States. And on a global basis, ex-China, that number is over 3 million sites. At the same time, you're also seeing increased tenancy ratios, the number of carriers or customers per tower, which creates the attractive unit economics that underpin the tower business model. And based on the terrestrial ecosystem it supports, that's why you see U.S. carriers investing over $80 billion in new spectrum to unlock the capacity they know consumers and enterprises will demand over time. That's just a down payment on the investment necessary to realize the full potential of 5G.
The next slide gives you some perspective for the progression of the corporate ecosystem that has evolved alongside the growth in towers. Each market has unique characteristics, but there are some strong underlying trends that have led to the emergence of the tower consolidators. The most powerful of those drivers is the neutral host model, where it's ultimately most efficient for one tower owner to provide access to multiple carriers. The economic rationale for that is even more powerful after the substantial investment in spectrum the carriers have made. As you can see, with some of the high-profile media asset divestitures, they are actively freeing up capital, shedding non-core assets to fund the 5G rollout. We'll also be part of that solution. Originally, these consolidators maintained primarily domestic footprints, but almost all of them are increasingly investing on a global basis. This expanding market with consolidating ownership has been the environment in which we've successfully invested and built tower companies over a very long period of time. It's a story like the others you'll hear today of growth driven both organically and through strategic M&A. Let's talk about how we've successfully executed on these cycles in the past. Specifically, we'll cover two investments, Global Tower Partners, or GTP, which Mark founded in 2003, and the second is DigitalBridge, which was founded in 2014 by the former GTP team.
Now I'm going to ask Mark to rejoin us and talk about the founding of GTP, the opportunity he perceived, the tower landscape at the time, and how he and the team successfully created what became the largest private tower company in the United States before its sale to American Tower. Mark, take it away.
Thanks, Ben. GTP started in 2003, was formed by a view that the tower sector could perhaps have a different approach to how you could build a better company. So I made that decision back then, alongside of my partners, to build, at that point, what we believed was going to be the next generation of digital infrastructure in the tower sector. There were a lot of busted balance sheets. There were a lot of companies reorganizing themselves. A lot of people didn't believe in the tower business model. We did. We saw an approach and we saw an opportunity. We took a company that had a couple of hundred mobile towers and built it to over 14,000 cell towers, ultimately accumulating in a sale to American Tower for $4.8 billion in 2013. But how we got there was the real critical learning. This was the fun part for us. We got to rewrite the playbook on how you built a tower company. And along that road, there were 5 core ingredients to how you build great companies, not just in the tower sector, but across any sector in digital infrastructure. First, what we learned is it took talent. It took great people. Coming from the days of the early 90s when key executives like Alex Gelman and Jeff Ginsburg and myself built a great company, we brought a lot of that talent back because human capital is the most important thing you can have in these businesses. The second thing we did is we built a great M&A engine. We saw an opportunity to acquire small tower portfolios, roll them up together, and put them into a larger scalable platform. We did over 350 M&A transactions in 10 years. It was an epic amount of M&A, but we had a great team, and most importantly, we had a framework for how you acquired and built towers. I'll come back to that in a second. The second great thing about GTP was that we also were very capable of building towers. So not only did we have the ability to buy assets, but we also had the opportunity to build assets, and this was really important. The ability to buy and build is a key strategy that is resident today at DigitalBridge. Third, organic growth, working with customers. Finding ways to put incremental customers onto that existing infrastructure is the fastest way to create sustainable and long-term returns for investors. Our ability to lease and outperform our peer group was essential to our success. The fourth ingredient, understanding how to manage information. We built best-in-class systems from the ground up, creating an information database that allowed us to see the entire organization, from when a customer knocked on the door of a tower to ultimately them getting installed on that tower, and most importantly, turning that into billing and cash flow. And taking that information along each step and understanding how to ultimately break down that experience and make it better for customers. The weaponization of information at GTP was second to none. It helped us inform our decisions in buying towers, building towers, and ultimately, how to serve customers better. The last ingredient was, most importantly, thinking differently on how to finance this asset class. In 2005, we did the first cell tower securitization. We went on to hit that marketplace 4 more times. Today, here at DigitalBridge, most of our businesses on a global basis have had access to that capital. But the key learnings at that point in time, working with the rating agencies, explaining to them the importance of these long-lived cash flows, the exposure to investment-grade counterparties, these were the key pillars and the foundation for how you finance this asset class. And we've taken that today to finance not only towers, but small cells, data centers, and fiber infrastructure. So at the end of the day, GTP was not only a story of success and returning capital back to investors, but it was about building that playbook. It was about building a framework for how you invest in what we think today is the best asset class. These learnings have been taken forward, and we've taken them in other verticals, and we've grown our team on a global and scalable basis. But I'll never forget the formation of that company. It was a special time for us here at the firm and a special time for all of the key partners here at DigitalBridge.
Thanks, Mark. GTP was an incredible experience where many of us began working together for the first time. In fact, when it was sold in 2013, Mark and I felt like our work wasn't quite done. The digital infrastructure sector was just starting to emerge as an important segment of the infra asset class. We felt like many of the relationships and capabilities we developed were applicable across a broader opportunity set, and that was the genesis of DigitalBridge. One of our first investments was founding VerticalBridge in 2014 in partnership with Alex Gelman, who'd been the COO of GTP. Alex is going to walk us through some of the highlights from that experience, what he's built, how some of the core strategies from the Tower Playbook have contributed to that growth. Alex?
Hi, everyone. I'm Alex Gelman, and I'm the CEO and one of the co-founders of VerticalBridge. Since its founding in 2014 by members of the Global Tower Partners leadership team, as well as others, VerticalBridge has grown into the largest private owner and operator of communications infrastructure in the United States. We are private, at scale, and permanent, giving us a unique position in the market. In addition, our assets are 100% in the US and macro cell focused. Our executive team has centuries of experience, and we consistently beat our public peers in all growth measures. Our continued focus on growth through lease-up, accretive M&A, build-to-suit, coupled with our back office, has allowed us to achieve a 68% TCF CAGR since our initial scale acquisition in August of 2014. Our portfolio has been assembled and really curated through more than 440 individually underwritten asset acquisitions. Major transactions include Alaska Wireless Network, giving us the most towers in the state of Alaska, Exelon Corporation, where we acquired assets and partnered with them at 3 subsidiaries, acquiring towers from T-Mobile, from AT&T, and from iHeartRadio, among others. I've been in this industry for a long time, and I've had many sponsors and investors in my career. DigitalBridge is truly unique, and there are 3 aspects that stand out for me for DigitalBridge versus other sponsors. First of all, in the early days, they were extremely helpful on the M&A side, not just in sourcing deals, not just in their relationships, but also helping us assess what to acquire and how to finance it. Their support, involvement, and commitment very early on was critical and helped us stand out in a hyper-competitive market. A second major advantage working with DB is balance sheet management. Their active approach has allowed us to tap into the securitization debt market as well as other aspects of the debt market, and in a way, with a speed and at a level we could not have done on our own. For example, our first securitization was really viewed as GTP 7 more than VerticalBridge 1, and that helped us tremendously. So all told now, we have over $2 billion of equity commitments and nearly $3 billion of debt facilities, including $1.7 billion raised through 6 ABS financings. Lastly, but not least, a major benefit of being a DB company is the perspective it gives us across the US and the world in communications infrastructure. In the US, we're allied with leaders across all other areas of communications infrastructure, including Zayo, DataBank, and Extenet. Think about it. The largest private fiber, data center, small cell, and tower company under the same umbrella gives us tremendous advantage for what we can do for potential customers. We also get a broad view across towers and communications infrastructure worldwide. And in that capacity, I'm happy to be involved with several of the tower companies in the DB portfolio outside of the US. DB's relationships also give us access to the C-suite of our biggest customers at a level we would never be able to reach on our own. With all this help from DB, we have successfully replicated the GTP formula at Vertical Bridge. And now we are in a unique position to succeed in the emerging 5G market and continue to outperform all of our competitors. And with that, I'd like to say thank you, DigitalBridge, and I'd like to hand it back to Ben and Stephen.
Thanks, Alex. What's really compelling about the Tower Playbook that both Mark and Alex discussed is how portable it is across geographies. As we've expanded our geographic scope, we're able to leverage those key learnings in new markets. That's a list of to-dos and not to-dos, which are actually often more important. We have now built 8 tower companies globally in North America, Latin America, Europe, and most recently in Asia. And while each of those markets has unique characteristics, we found the core tenets of the playbook hold true. Whether it's the 4 corners of underwriting that we'll talk about later today, or the benefits of our reputation as we enter new markets and finance growth at the portfolio company level, the transferability is a true differentiator that gives us a fundamental edge.
Stephen, another interesting corollary to what you're describing is the fact that these technology generations don't all roll out at the same time globally. As we get set to accelerate 5G investment here in the US and across the globe, many markets are still in the early stages of their 4G deployments. That asynchronous rollout allows us to transfer knowledge we develop in early adopter markets as we expand into new markets with advanced knowledge that allows us to be more efficient and to more rapidly deploy new infrastructure in some of the fast-growing markets we're invested in, like Brazil and most recently Southeast Asia. Ultimately, these advantages add up and manifest themselves in higher growth, lower costs, and better execution that drives improved investor returns.
Ben, now that we've talked about some prior investments, we're going to look forward and discuss a couple of new opportunities that will benefit from our extensive TowerCo experience. We'll start by introducing you to Justin Chang, who leads DigitalBridge's Asia strategy, to talk about Edgepoint. Justin, take it away.
Thanks, Stephen. What's really interesting about Edgepoint, the Southeast Asian tower platform that we launched a little bit less than a year ago, is how well it speaks to the commentary that Stephen just made around the transferability of the tower digital playbook, not just across geographies, but across technology cycles. And what I mean by that is Southeast Asia is a really interesting set of regional growth economies, but the 4G penetration levels are pretty low, right? So the experience and the expertise that we have watching and participating in the 4G cycle in the US and Europe, which is now behind us, that experience and expertise we can bring right to Asia, right? And it's new for Asia, but it's something we've done before. And so something we can really provide to Edgepoint and the team as it grows and scales. The Southeast Asian economy is fundamentally very attractive. As people know, high population growth, demand growth, consumer spending, mobile data growth, particularly in Indonesia and Malaysia. If you step back for a second and just take those 2 countries, the population of those 2 countries is over 300 million people, right? GDP growth of 6% on average. Mobile data consumption growth 25% a year. These are really significant numbers off a large base and high growth. And that's the opportunity in front of Edgepoint as we participate in the digitization and the 5G in the years to come. If you look at these markets, in addition, they're highly fragmented, right? There isn't really a lot of scale players. There's the opportunity to be a consolidator, to really grow the business, and to do it at very attractive valuation levels. These are opportunities that we just don't see in other parts of the world right now. In many respects, Southeast Asia is one of the remaining frontier opportunities, and we really see an opportunity to create a lot of value in these markets, employing the same playbook that we've done in the United States, that we've done in Europe, and that we've done in Latin America. These are really attractive macro tailwinds. And as I step back for a second, you have to remind yourself that the digital infrastructure in this part of the world is really underinvested in, right? So whether you look at the number of subscribers per site, it's really, really high, higher than other parts of the world. You look at the spectrum availability, it's really, really low, right? So those two things combined really underscore the need for more tower sites, which is an obvious benefit to tower companies and plays right into Edgepoint's thematics. In a little less than a year, we've already completed 2 acquisitions in Indonesia. We've done 3 acquisitions in Malaysia. We've scaled the company very quickly, and we're at almost 10,000 towers. We formed this company in partnership with Suresh Sidhu, a really amazing, well-regarded, impressive tower company executive from the region. Prior to joining us, he spent the last 10 years building and leading really the only other Pan-Asian tower platform as the founder and the CEO. He joined us not just because we're a financial sponsor with shared vision, although that matters, but he really saw us as a strategic partner, a value-added partner who can really help him and the team at Edgepoint grow and scale from a strategic and an operational standpoint. And we're already doing that. Strategic M&A and finance are 2 areas where we're already leveraging the global playbook, bringing our global platform and resources to bear, whether it's looking at acquisitions in these markets or looking at consolidation opportunities in adjacent markets. Those are things we're already doing, working hand in hand with Suresh and the team, and we expect to do that in the months and years ahead. Look, stepping back for a second, we couldn't be more excited about this opportunity. We're in the markets at the right time. We've already built scale, and we're building really an innovative market leader that's beginning to be recognized as a leader in the region. And while it's innovative in the region, it's really something we've done many, many times, right? This is a classic DigitalBridge tower consolidation play. We've done it in the US, we've done it in Europe, we've done it in Latin America, and now we're bringing that playbook to Southeast Asia. We're excited about the opportunities ahead, and I think the years to come will be extremely exciting for Edgepoint.
Thanks, Justin. To round out the 5G thematic, I'd like to introduce you to Kevin Smithen, our Chief Commercial Officer and Head of Strategy, who helped secure our investment in Vantage Towers.
Hi, I'm Kevin Smithen, the Chief Commercial and Strategy Officer at DigitalBridge. I'm happy to walk you through our recent €500 million strategic cornerstone investment in Vantage Towers, Vodafone's recent TowerCo spinoff, which IPO'd in April of this year. This partnership is a culmination of several years of discussions with the C-suite of Vodafone on the topic of mobile infrastructure. When you think about the drivers of the Vantage Towers investment, the map you see here really tells a lot of the story. Vantage Towers is at the heart of the European 5G infrastructure opportunity. It operates in 4 of the largest markets, Germany, Spain, Italy, and the UK, and has number 1 or number 2 position in 9 out of the 10 markets it serves. Nearly all of the European MNOs recently guided to a sharp increase in mobile CapEx for the next couple of years as they build out 5G. With tenancy ratios across the portfolio at 1.6 times tenants per tower and just 1.2 times in its core German market, there is an incredible amount of capacity to expand, especially when you compare that to a market like the US. Vantage benefits from a long-term MSA with an investment-grade global anchor tenant in Vodafone, one of the world's largest carriers. In our view, Vodafone will invest heavily in its mobile networks as evidenced by 7,000 built-to-suit commitments over the next 5 years with Vantage. In the medium term, the key to growth will be led by non-Vodafone tenancies and built-to-suit, and this is where DigitalBridge can be very impactful. We will help mold Vantage into an independent TowerCo by assisting its management team in new organic value creation opportunities such as small cells, indoor DAS, and ground lease buyouts. We are a proven global leader in each of these segments. We believe the European tower sector is at an inflection point as 5G densification drives lease up on existing towers, especially in Germany, where the challenger brand, Drillisch, is going to be building out a 5G network, and there are also mandatory 5G coverage requirements for the 3 incumbent operators. We are very bullish on the German tower market as a result of these factors. Specifically, Vantage is building a number of white spots or built-to-suit towers with 3 investment-grade anchor tenants. These are some of the highest IRR built-to-suit towers we have encountered anywhere in the world. Supporting the development of Vantage lease-up strategy by working to drive those tenancy ratios higher is actually one of the key areas we can help the company realize its strategic plans. As you've heard, we have a long history of successful growth in partnership with leading carriers, and we hope to share many of these key learnings with Vivek and his team as they execute on their growth initiatives. At the same time, DigitalBridge is well positioned to be a key financial partner to Vantage Towers as it takes advantage of M&A opportunities across Europe. DigitalBridge, together with our LPs, can provide Vantage with access to significant firepower to create a credible strategic alternative for carriers that still own their towers. Fundamentally, this investment is built around supporting a strong and highly strategic relationship we built over the last several years with Vodafone, a key customer and partner. We look forward to helping the Vantage Towers team realize their goals at the heart of the European TowerCo opportunity and explore additional areas of collaboration with Vodafone across its portfolio. With that, I'll turn it back over to Ben.
Terrific. Thanks, Kevin. Well, we've just completed a whirlwind tour of the last 20 plus years in the tower business. Starting originally with GTP, leveraging those experiences to build out companies like Vertical Bridge, ATP, MTP, Digita, Highline, and now Edgepoint, and supporting our partners at Vantage Towers. This is going to continue to be a robust area of investment. As you saw earlier, towers are crucial to the fabric of 5G, and we expect to continue to be active across all of these platforms. I'll finish with an observation that always strikes us at the beginning of each of these cycles, where there's enthusiasm about some of the clear use cases that faster speeds are going to enable. Better YouTube viewing, for example. What we've always found is that while many of these advances manifest themselves, the most significant use cases are the ones we don't anticipate. When we started deploying 4G, no one foresaw Uber, TikTok, Zoom, Airbnb, just to name a few. 5G will change the way we live and work in new ways that we can't even anticipate. We are thrilled to be part of that evolution, applying our experience and expertise to advance connectivity to its next stage.